Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who will be here tomorrow afternoon. How is everyone doing? How did you survive the trading day? By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers, hit those like buttons and leave some comments. Let's see, who do we have here? Hello, Ken. Hello, Amit. Yeah, I hope everyone is well too, and I'm just feeling tired. Been up since 2 a.m., so it's been a long day. I think I might just do one again today. Davey, hello. Hello, Christoph. Hello, Ted. Glad you had a great day. So, little pullback today. We'll take a look. I'll show you some stuff. I'm going to show you a couple different things just that you can apply to markets in general and stuff. Some people probably know, but I'll give you some examples of things. Hello, Abraham. Glad to have everyone. Again, thank you so many people for attending on a regular basis. I really do appreciate it. All right, tomorrow morning you have durable goods at 7:30 Central. That can be market moving. And then you have continuing jobless claims, durable goods orders, X transportation, and initial jobless claim. So 7:30 Central, 8:30 Eastern is going to be pretty big. You got Waller speaking at 8:10. Then you have another big one, 8:45 manufacturing PMI flash. Okay, then you got Evans speaking and Bostic speaking. So we have some things that can definitely move the markets tomorrow morning. So please remain on your toes. Here's your heat map today. Again, there's been a lot of option stuff going on in Apple, plus their buybacks are still going on. Same with Tesla. There's been tons of option stuff. Not going to speak specifically about that. Microsoft down again. You got some mega caps pulling back today. People were, this is what drives me crazy. Banks pulling back. We'll take a look. Remind me to look at Home Depot also in here. It's looking like it's going to start the next major breakdown play. So that was off 3.85%. FOMC still 66 to 33, 66 favoring a 50 basis point hike in May. And keep in mind, May's a long way off. Where do we sit with alpha? 44.87, and we're definitely back down into negative alpha. Negative gamma. Boy, my head is just woof. So if moves can be accelerated, especially downward moves, if we continue the sell off with some people starting to lock in some profits, we'll keep an eye on that. Again, I know we're off 1.27% in the S&P, 1.34% in Nasdaq, 1.37% in the Dow. I gotta say, is the market going to crash based off this little pullback? Put this in perspective. I just want people to put these things in perspective. We go up literally 9.3% in 7 days. Okay? And we pull back one. I'm not saying we can't pull back further. I'll show you exactly what I'm watching. But this is not a crash. This is not. It was so back in the la la land with some of these option squeezes and GameStop and like the Tesla rip your face off move for the last few days, Apple, and some of this other stuff, some of the meme stocks again playing around. It's back into this full. Like told you before, I warned you that everybody was still in buy the dip mode. Here, the VIX, not much fear in here. There was a little rotation into bonds. You see here, little moving up, closing above the 12.5%, and right against the flattening out rotation zone. So this is my key inflection point. I'm actually, if we do continue to sell off, I'm targeting 124.02. Remember, bouncing off that longer term target area right now, coming out of oversold conditions and starting to move back up. So that's what I'm watching for in notes. Well, how does that tie in with the markets? Because if we keep selling off, we'll probably still get that rotation into notes. Today, Little interesting, there's a nice little bullish play on the open. I'll show you that. Nice little bullish play. Really quick, this double bottom play on the 5 minute coming up, stalling out here. And remember, I said keep an eye on that 1 hour rotation zone, because the 1 hour rotation zone, see here, I still have it on from this morning, but the 1 hour rotation zone popping up between the fifth. So you start the momentum bars. And whether you did this, I used the most recent move down, but if you did this, if you defaulted, you're still virtually in the same area. I know I get that question a lot. Now, if there's a huge separation, I'd use the most recent swing, and then you go back to the other swing if it's exceeded. Now, you see here poking up between that 50 and 62 and rolling down, not being able to close above that 1 hour rotation zone, and then heading lower. So my next targets were down with this 44.48, which was based off this pausing area right here. I'll show you. Initially off the open, again, this is from back from the highs of yesterday, which we did form an inside bar so far. I had it here, and that gave me this 44.59 area to watch for a potential pause. Again, bouncing back now into the 15-minute rotation zone. You know how much I focus on that. Then slicing through this, but this gave us the next pausing area. So, and remember, if you leave it on here, this is key area of resistance now, but I already have the 12.5 there, so I can move this. So if we push lower into the Asian sessions, right now we're testing this. If we push lower, I'm watching minor 44.41. But where are we sitting now? Pretty much a close just below. We still have some time left before this bar officially closes, but just into right at this rotation zone. So if we do close below that, we still have some support. But watching this, and I'll show you the Dow and the NASDAQ have a clearer picture. If we start breaking below yesterday's lows, remember inside bar on the S&P today, if we start breaking below yesterday's lows, I'm going to be targeting 4,400 to 4,404. And then below that would be the daily rotation zone. But so far, this would be a sideways correction on a bigger time frame. Yes, we've pulled back on shorter time frames, but if you look at it on the macro, it's still a sideways correction. So that's what I'm going to be watching for overnight right now. If we do rally up, again, key line in the sand, if we do bounce back up, I'm again watching the 50 to 62.5 from these lows for the overnight, especially in the European. If we get back up above this 62.5 tomorrow, then I will be in bullish modes going into the morning. NASDAQ, what's interesting, this technically qualifies. It doesn't look great, but it technically qualifies as a double top pattern. So this is why you have then these two targets. You could go for all three. I'm going to focus on the first two, 14,351, 14,294, and then 14,239 cuts into the wicks. But that is definitely something to watch. It's just, it makes it a little sloppy, but it is triggered on the 1 hour. And watching just to see where we finish out the day to see if it triggers on the 4 hour. It is slightly lower probability since it's against a 4 hour rotation zone. And you can see here, even if we got to all the targets, it wouldn't even return it to the daily rotation zone. So that's where we're sitting right there. That's what I'm watching overnight, especially the European session if we continue the pullback for there. So that's really key. Dow, also Dow, this is a cleaner double top pattern that has not triggered yet, but it's confirmed but not triggered yet. So which means it's a shorter play, but I wouldn't play this shorter term going into the Asian session because of the slower price action. If it does confirm during the Asian session, I'd look to play it during the European session. But those targets, 33,990, I just go to 34,000, 33,870, then 33,750 area. And you see the 4 hour rotation zones out of the way on that. And that actually, the first target returns you to the daily rotation zone and this key support. So that's the one I'm really focusing on for any overnight price action. Let's see who else we have here. There is no fear in the market. No, there is no fear. So far, orderly pullback today. GME is a new VIX. That's a funny comment. Hello, Wavy. Apple holding up the NASDAQ. Yeah, so the mega caps were holding up the NASDAQ, and the NASDAQ was stayed up a little more today because of Apple. And remember, you still have this concentration of the big boys with that mega cap index. Remember, if you look here, my ratios, I mean, we completed that double. Even today, completed that double straight off the 50. The technical analysis works perfectly on ratios and just MGK. So that double is now completed. I'm watching to see the pullback on this now with this mega cap index, because we could still pull back tomorrow and then rotate back up. It's just that kind of silly environment. Value versus growth almost to the full target. So even with a pullback tomorrow, it still does not invalidate that. We could still make one more push higher. Not in overbought condition yet on one of the things, in slight overbought condition, but no rollover yet in something else I do follow. Where else do we sit? Russell, again, rejected from this key level, pulling back just below that 2052. But if it falls through tomorrow, my support's at 2020. That's what I'm watching in the Russell. DAX, again, rejected here, trying to break down, but still holding this 14,200. So that's what I'm going to be watching with the European session. That's what I'm keying off of. Crude, interesting. Let me show you. This was a good example. Let me get that 4 hour. So 4 hour rotation back up. Moving back up, I did my reverse harmonics, and they could be on the same bar, which gave me this 1488 level. We do not have a potential double here, by the way. On the bigger time frame, we do have a little mini one. But we've got waning momentum against these key levels, but still no larger term sell pattern triggered yet. Nothing's triggered yet. I'm still watching for it. Even though I'm hearing stuff, we're going to have an epic short squeeze into there, well, fine. This can still be, I mean, until we break down, it's still from the trading from the long side. We had that double, remember? We've run up, we returned to the 4 hour rotation zone. No triggered shorts yet, so you got to still go with the long play, at least intraday. And the key level for the closing basis is still this 116.60 something area. What am I watching for on the shorter term? We have this little mini double top that is not confirmed or triggered yet. So then that would still be a little minor pullback to potentially 111.46. But if we look at that, it doesn't even break this properly drawn. This was a trend line redraw. This is the new defining point, and wouldn't even violate the 4 hour rotation zone. So still no major breakdown, even with this pullback on the larger term play yet. So that's what I am keeping an eye, and we have the waning momentum with the divergence. Does that mean it has to roll over? No, that's why I need some confirmation. What else? I want to show you one other thing. When I talk about a return to, you remember how I talk about returns to the breakout zone? So we had this prior here. So you see this gray line right here? That's this prior, let me pull out a bit. That was this prior top area, which is resistance. We're breaking above it. So here's the plays on the shorter term basis. If you're going to play it, where we came out of the rotation zone on the 4 hour, remember? Breaking above that level, a really nice retest. Okay, and this was, again, we're in bullish mode, and on a 5 minute basis, I do not use this little double for selling. I'm watching it for the key first level to see if it holds there. Now, that key first level was this prior major resistance becoming support. Then we got momentum play rotation back up into it. So that's the way to play these short term. When I talk about a break and a retest, even this was a break and a retest coming up and a second retest, but it gave areas against, remember, the resistance. You can see it here on the 1 hour. The resistance area that formed this little mini double becoming support tested twice and even bounced off here on this little, you can see that double really nice on the 1 hour, coming back down, retesting, and then moving back up to form the double. So that's the way when I talk about a break and a retest for stocks, for indices, for futures, that's exactly what I want you to start looking for if you want to play them intraday. Whether you play it with options, whether you play it with futures, whether you play it with just a stock, those are the kinds of things I'm talking about. And again, just to reiterate, even if this double triggers and comes down to full targets, it does not create a longer term sell signal yet. But we are getting divergences and it's having a hard time pushing up. I am still keeping an eye on those higher prices until we really get the rollover play. Gold, trying to get back up, a key close into this area. So again, not stalling out at this trend line, but if we start really getting a move about 1960, we could see, especially if the market continues to sell off, another push higher in gold. Silver, still shop just in consolidation, so I'm watching for a breakout of that. Already went through notes. Again, with a continued market sell-off, I'm really focusing on 124.02. And with the volatility even in notes now, things can be played intraday in that. Dollar index, still double in place. Nothing has changed there. The custom mega cap index is just really, and you can see with Apple holding up today, really just a pausing bar up here. So tomorrow and you can make this index if you are in TradingView or whatever platform. I'm just doing Apple plus Microsoft plus Tesla plus Amazon plus Google. If we continue to pull back tomorrow, this is sort of my own mega cap thing. I'm watching 7,400 for a pullback. So I'm going to keep an eye on there. But again, we came out of overbought and you do see this divergence. Let me expand this. So you see higher high in price action, slightly lower high, almost equal high, which is still technically a divergence even if it's an equal high. So it's running out of momentum. So that's why I'm watching for that start pullback level. And then if we break below that, the major is about this 73.37. So this is the zone I'm watching to see if we hold. If we start breaking below there, then I'll watch for a bigger pullback because remember, mega caps and garbage growth has led the rebound. That's why I'm paying very close attention to this. So you can do something similar to that with your own charting platform. Let's see where... Mike, the strong move away from the short-term 62.5 on the ESA was really telling, at least for me, on the 5-15 minute. Yes, that's, again, if you're starting to watch that, I'm really happy to hear that. I hope you notice, and from your comment, it looks like you noticed that. Because when it can't get through that 65, the 62.5, especially once you get momentum bars going the other way, that is a great way to jump on a trend. It is a fantastic way to jump on a trend. Like it's whether you're long or short, that is a great way. This was the short play, and then just grinding it down. And you could really see it on that 15 minute. And remember, I went over this morning, watch that 1 hour rotation zone. And we got rejected with it. It made that little retest, could not get above it, could not get above that 62.5. From this move, right in there, look at that. Remember, 50 to 62.5 is so key. You get rejection there, rollover move, play it. That's your play for the rest of the day with your pausing. I'm really glad you noticed that, Michael. I wondered that 4 hour qualified. Thanks for touching on that. Do we have a mini double top on the Dow 2 4 hour daily? Yeah, I think I went through that. Sorry, I'm just catching up with comments. I don't see them all the time right when they come in. Yes, you do have mini double top. So that's why I'm watching. We have setups for a potentially bigger pullback. Is this bigger pullback, again, a crash pullback? No. It's run pretty far. This would just be a pullback. Then we'll see. We could actually see another stupid push higher. And unless we really get some fear coming in the markets and really some across the board selling pressure. Yeah, it's full-blown casino mode back in Tesla land. Full-blown casino mode. Which is interesting, the timing of all this with all the stuff that's been dropping with the SEC investigation. And we've got that massive gamma juicing going on again that we haven't seen to this extent in a long time. It's always just very interesting, the timing of these things. By the way, Tesla, this is starting to look like a topping pattern. Coming back to this little breakout zone. Remember, I said with the gap play this morning, then it ran up. My key area was still this 1028, poking above it, rolling back over. Even if it rolls up again, I'm watching with this waning momentum. I am watching for, we could easily get, if the markets do not roll over tomorrow, we could easily get one more push up, and then I will start really watching for the downside. But if you break below today's really gap open, then we're probably, the tops looks like it's in, and the bigger pullback in the first key area would be back to 935, around 935. I wanted to highlight Home Depot. Home Depot, and I'll show you something else. Remember, let me show you here. Let me show you here. So when something starts not playing the probabilities, like, all right, we had this. So when something doesn't work, so we got above the 62.5, coming right up, and remember, above the 62.5, I start now for the gap fill. I'm targeting the whole gap fill, but remember, once we get above the 62.5, it's really a range of 87.5 to 100. Stalling out that 87.5, it could not make the full push with the gap fill and rolling back over in this channel. So I'm really watching tomorrow, because if you take a look at Home Depot in the bigger picture, look where it stalled out. Looping over 50, hooking over 50, weekly rotation zone. So it wasn't able to fully complete that gap in that weekly rotation zone and rotating down. This is a sign of weakness. So this is starting to expose things like Home Depot, and, you know, housing is starting to slow down again, especially with mortgage rates jumping as much as they have. I mean, I saw some quotes today, like for jumbos for 4.625. That's a big move up in a month. So things like Home Depot breaking down. What would confirm the breakdown? Well, start is if you break below this little flag pattern, and then especially if you kiss it goodbye, and then remember, we're right between that 50 and 62. So could it still even come down and then bounce back up and still go and fill that gap? Yes. But you start getting a break, and especially a daily close below that 62.5. I'm going for the retest of the lows and beyond. Just a little thing I'm watching for. Also on the daily, with that gap, could not even return to the 200. The 200 support. Support breaking, boom. Trying to get back? No. So when something doesn't happen, remember the doubles, I've talked about that, the ones that can't even hit the first target is a strong, there's probability shift that the move the other way will continue on the rollover. No, I do not. I do not think it's a big deal. And again, this is all being juiced. Especially since I'm not even going to comment on it. It brings too many problems. It brings too many problems. That's why I will continue to do the technical analysis, but I'm not commenting on it. It's not worth it to me. I learned so much from watching your live streams, Mike. An enormous thank you. Small fish here, but looking forward to giving back through the courses and the long-term buy. Thanks. You are welcome. Yeah, that's why we also trade with the stops, because nothing works 100%. Those gap fill is very reliable, but we rolled over. Now, could it still hold this level, Christoph, and rally back up and fill that gap? Sure, that's why I'm watching this channel, and that's 62.5. But we closed below now this up move 62.5. This up move 62.5. Then the next thing I'm really focusing on is a break lower, and really watch below here. I'm just giving you a heads up. If Home Depot breaks below the lows, and this isn't just for this week, it's for in general, even if we bounce up one more time and then roll over, because look where the top of the rotation zone is. So if this flag pattern holds, that's at 350. Your 200's at 350. So if it did make another peak into the daily rotation zone, that's probably the last hurrah before a rollover again. Now, I'll stop watching that if we close below the 52.5. But what I started to say was if we get below the lows back from the 22nd of February, watch out, because you're into a clear path move on a larger time frame. And the end of that clear path move, interesting enough, is just behind the weekly 200, which is actually one of my long-term targets for HD. Once it really starts breaking down. Now, would I put on a huge bear put spread right now based off that target? No. We start breaking down, though, especially getting into this areas down in here, yes. What are your thoughts on the golden pocket for retracement? It uses a 50. I found the 62.5 tested out better than the 61.8. That's why I use it. I did extensive testing between the harmonics and the fib numbers. And the harmonics across the board tested out better. That's why I use it. If I have no problem with people using the fibs. If you want to use the fibs, go right ahead. The reason I don't is because I found out the harmonics work better. So I will use what works better. IQV. That's the only reason. I mean, the 61.8 and 62.5, they're close. IQ. What is IQ? Health services. I've never looked at this, I don't think. I've never looked at this. All right, so weekly back to the rotation zone. I just got to do some looking. I have actually never looked at this. So this will be fun. I love looking at stuff I've never looked at before. Yeah, you're starting to tip over here. Definitely starting to tip over. You had this little double. Let me just see how that played out. I really like to see what target it got to. Couldn't quite get to the final target, but if it hit the first and second with a rollover, I really needed to break. Let me see. It's starting to roll over, starting to look like it's in tipping to bearish mode. I'd give it a little more room before I got super bearish on it. You had this gap, but that filled already. I'd be watching about 217. Start and get below 217, then I'd start really focusing. Personally, that would be my focus to the bearish side. Right now, you're also at the reason I'm not super bearish yet on this is because you also at end of day today, you bounced off of that and got that little bounce. So that's if you want a preemptive warning sign, 219.30. You see how one of the things I watch for with these doubles are the return between this and the candle bodies right where it bounced, right here. So you want an early warning sign if you want to do an intraday play. I could see something below if the market's rolling over and you got some weight coming in, healthcare. I mean, that's where this is in the services to the health industry. So health services, you got some weighting coming down in there. Below 219.30. Again, break below, retest that level, and then roll over. That could be an early play. The longer term play would be if it closed below that 62.5, because that double would then be over. And remember, you are against a weekly rotation zone. So that's where that sits. Because if it does hold here, it could still push back up. If you get a bounce like tomorrow or Friday and we don't break below this key level, it could still push back up and complete the double and do a little fake out move for people. That's why I need to see a little more to the downside. I'd be a little cautious on this, being super aggressive. But longer term, I definitely see more downside in this. Especially, look here, clear path move. Clear path move on the weekly. So what does that look like on the daily? We look at stopping points on the daily because we saw the clear path on the weekly. And look at this. You don't look at where the first stopping point is. It would be the breakout area. You see this? Let me zoom in. So you remember that clear path on the weekly? Do you see any major stopping points? This is super minor. You know, you got a couple very minor ones, but not enough. Now, this is a stopping point. Why is this a stopping point? Because look at this major base it formed on the daily. And look here, fantastic. Up against it, little open pullback, and then a close above it, and then off to the races. So that is a very key level. So when you're looking at this on the weekly, and this is not just for this stock, I'm trying to teach you something to utilize, period. And you can see it right here. So this is where there's very little stopping points. If you roll back over and get below this 208, you could get to 195 pretty quickly. Because there's nothing to lean against for people. So that's where that's a little more in-depth teaching on the clear path. Remember a few years back, when I brought up SE, it had a meteoric run and crash completely. Can you take a look at that again? So that double never triggered. Yeah, that was, I have not looked at this in a while, but you see, even with these bounces, weekly rotations, and it actually looks like this is trying to put in something, but do they even make money? Oh, boy. The only thing is if you start getting a weekly close above this 131 area, it could make a higher pop, especially if they keep rotating into junk. This hits my junk category. Why is it in my junk category? Because they're missing earnings. They're missing, and look at their earning basic EPS, minus 383. All right, just got the huge run up, and now the collapse, retest of the weekly, retest of the weekly, retest of the weekly. Now we're at the retest of the weekly, and it did get a little tired. You got some divergences coming down here. So it would be a super aggressive play, but I'd really want to see how that weekly close above that. And conservatively, the daily, even on a bump up to 143, I'd just see if that stalls out there. But you know, if retail see this is interesting though, because we're getting money flowing into oversold junk, but this hits my oversold junk. And why doesn't this interest me longer term? You could still get a pop, but it's internet retail, and retail will probably be slowing down tremendously. I'd have to do more investigation into all the fundamentals and everything behind it. But internet and mobile online gaming services, that can slow down into a recession too, and into an inflationary environment. So this will be interesting. If you wanted a little potential long play, it would just be running up to the 50 on a break. You know, you still have a gap left behind. So if you got momentum, and this doesn't just have to be tomorrow, if you start getting momentum above about 130, 135 area, you still have a gap play up here and the 50. That would be my only short-term play. And that would probably take it to overbought condition. Now it is starting to roll over again, so you also have a downside gap play if it does strongly roll over. I have not looked at ARC yet. You want me to look at ARC? ARC, back to the weekly rotation zone. Remember, we had that little cluster right here coming with those divergences back to the weekly rotation zone. On the daily, this is all going to be, again, keying off NASDAQ. If the NASDAQ pulls back substantially, then I start watching for lower prices. Other than that, it would have to get below about 62 before I really got interested to watch for another push lower. We're sitting right here just pausing out right now. We're looking like we get a rollover signal, but it's not confirmed yet. Again, below 62 would be a short-term rollover signal. Other than that, it's the first key. Now, if it breaks, what's interesting is if we do break above this week's high, you could get a little pause without triggering that rollover signal, and you start getting above this week's high, I'd easily target 74. Now, we run up into this area, I'd watch for another major rollover signal because we still have ARC junk. So that's your only play to the upside I would be watching. And the challenge with that is, you see here, you know how I love these clear paths? Why? Because watch, let me do a little more teaching here. You see, all right, you're into some clear path here, and the target, full target on that is the 50 with the clear path. So even on another pop up, you have limited upside and a fair amount of downside risk. And then even if you pop above there, you see how choppy you're trading into? You're trading into multiple stopping points. And I'll show you what I mean. This is why, you know, I like to find things that make it easier to trade, because you pop above here, stopping point, right here, stopping point, stopping point. So, and you take that and you're also, look at those stopping points. There's your 200 week. So that would be the only little pop play, but you're also against the weekly rotation zone, which is now returned last time. Weekly rotation zone popped, weekly rotation zone, dropped, oversold, divergences. It's getting back to that weekly rotation zone. So you have limited upside and the risk is to the downside. That's why I like some of those clear path moves again, because it's removing a fair amount of stopping points, so you can literally focus on cleaner price action. All right, Beam is also in that great sense with the long clear passes in a weekly. Beam, yeah. Beam Therapeutics breaking down. Ooh, this. You had that kind of significant level. Can tell you right now that's a major significant level, and breaking back below that. That closes down here on the weekly, especially. Yeah. There's your clear path. And you can already spot. I fine tune it off the daily. Let's see how that looks like. So here's again, I'm not going to go into shorter term, but you have this resistance, trying to poke above it, but closing back below, closing at it, then finally a pop up, then the next day retesting that area. You can see here this little wick retest, and then off to the races. So that is, I'm not going to go down like to the 5 or 15 minute on that, but that's a key retest on a break. And now, so if you break down here on the weekly, this thing heads lower, you have a clear path down into there. So yeah, I'd have a target zone right down there. Amazon. Amazon. Again, we've confirmed this not on a weekly basis. That's why I'm still watching this on the weekly basis. This is triggered. May get a pullback now. It's confirmed, but not triggered on the weekly basis. And you've now taken 2 bites at the 200. I would predict if we pull back in the NASDAQ, continue with that double pull back, I would then watch for, again, I could see us getting a one more rotation back up. My key support on that's 3160. You don't really want to see a daily close below 3160. You had a close below that, then I'd start watching, because again, this was a massive move. You see here, even on that 4 hour, 3160 is below this little hitch, and then you just have clear path below. Now, what gets in the way? Your daily rotation zone and this 3160 area. So that would be my key support. You break below that, then I'd be watching for lower prices. You catch on anything there if you want to watch more aggressively. If it catches on about 32, 35 tomorrow, this little shelf, with the rising 4 hour, and you get a rotation back up, then that could be an interesting play for a retest of the highs. And then if it can break through this 200, it's softened up, then you could get a little upside pop again. I don't know if it'll hit all these targets. This is a horribly sloppy double on the daily. It works sort of on the weekly, and the targets take you up in this area, but I'd be taking those just for short-term intra-trade targets. The first target on a daily, if it does get above this 200, I would be watching is about this 3450. BKNG. This is a pretty easy. This is either a breakout or a breakdown play. That's a beautiful horizontal channel. That is a beautiful horizontal channel. So this would be either, yeah, I'd watch this intraday personally. 2200, 2201, you start breaking above, retest. You could easily make a run up here, and then you have the gap. So you have your 50 on the daily and your gap. And then a breakdown play, you have a gap. So right now, it does favor a rollover to the downside. The downside, the probability slightly favor. But that would be a break below at 2137. You could fine tune it off that 4 hour, but I like that 2137 level right there. Yep. And then it's the gap fill. To the upside, I might fine tune that a hair. If you want to be a little more conservative, about 2205. And then your upside target would be a run to 2260, 2263 to about, what's the close? 2281. So that would be my upside target area. Isn't that NQ a double bottom on the weekly chart? this. Not because of this hitch. This is too big a hitch in here. That's why I do not have those targets up. Between that really big hitch, because if you got the triple on the daily and you have this hitch on the weekly. So no, I am not trading that as a double. The probability you have too many problems with it. That doesn't mean it can't go higher. I just don't use the targets. Again, if we pull back and then rotate higher, the area I'm targeting is 14,861. Then through there, 15,314. So I'm not seeing anything else right now. I didn't glance at Apple at the end of the day. And that's just these moves. Whew. How much is Apple up since the lows to its high today? 15% in 7 bars, 9 days. Wow. Yeah, I'm getting more and more potential sell setups on stocks. But we're going to have to see if they even follow through. So tomorrow's going to be really telling. Tomorrow's going to be telling to see where we get to. So if we just get to these, even tomorrow, if we just drop to the daily rotation zone and then strong rotation back up Friday, I'm then targeting the higher prices again. If we get to pull back and then it can't get much of a bounce back up, that will be also very telling. So tomorrow, see, this is a tactical trading market. This is things can shift day to day because of everything going on. And we've still had that push higher in casino mode. So can that continue for a little bit longer? Sure it can. Can it continue even after a pullback? Sure it can. That's why you might be asking me questions. Well, why are you basing so many things on overnight price action and daily price action? Because in the environment we're in, when we start getting these big rollover distribution moves and bounce backs in an overall major bear signals, it comes down to tactical trading, and the strength of reversal moves can be very telling. So that's why. It's not the easy, okay, we're back, as I talked before, we're back in these kind of markets. Okay, this started getting challenging, but you still got your up moves. This gets super challenging until we finally get out of that buy the crap dip mentality, which at some point will get broken again. So with that, I will talk to everyone later. Hope you have a great rest of your evening. And I will see you tomorrow on the market preview show, and we'll review the overnight trading and get a better idea of what can happen with price action tomorrow. Until then, bye for now.